Hello students, in this session let us discuss the last 5 deductions which can be claimed under section 80. They are deduction under section 80 RRB, 80P, 80TTA, 80TTB and 80U. Let us start with deduction under section 80 RRB in respect of royalty on patents. This deduction is allowed provided the following conditions are to be satisfied by an SSC. The conditions are as follows. First one is the taxpayer is an individual resident in India. He may be an ordinary resident or not ordinary resident. He may be Indian or foreign citizen. Here residential status and citizenship are different. A foreigner can become resident of India for income tax purpose. Here residential status of a person is calculated on the basis of the number of days he resided in India in the previous year. So, to claim deduction under this section, he may be an Indian or foreign citizen, but he must be individual resident, that is ordinary resident or not ordinary resident. Second condition is he is a patentee or co-owner of a patent whose name is entered on the patent register under Patents Act 1970. That means here patentee must register his patent right under Patents Act of 1970. That is the second condition under this section, that is the patent should be registered under the Patent Act. Third condition is he is in receipt of royalty on patent registered after March 31st, 2003. His patent must be registered after 31st March 2003. Then only he can claim deduction under this section. So, these are the 3 conditions which the taxpayer must fulfill to claim deduction under section 80 RRB, deduction in respect of royalty on patents. Then what is the amount of deduction under this section? Here the amount of deduction is rupees 3 lakhs or income earned as royalty on patents, whichever is less. Rupees 3 lakhs or income earned as royalty on patents, whichever is less should be considered for deduction under this section. If the income is earned outside India, the deduction is allowed to the extent of income brought into India within 6 months from the end of the previous year. The income which he earned in India or income which brought into India can be considered for deduction. Any income earned outside India and which is not brought into India, they cannot consider that amount of royalty for deduction under this section. So, this is about section 80 RRB, deduction in respect of royalty on patents. Next section is section 80P. This section is relating to deductions allowed for cooperative societies. This section will be studied in the chapter assessment of cooperative societies. Let us discuss this section there only. Let us not discuss this section here because you already studied or you are going to study this section in that chapter. So, the next section is section 80 TTA, deduction for interest on deposit in SB. Here interest on deposits in savings bank account. Interest on savings bank account earned by an individual or Hindu undivided family SSC from banks, cooperative banks cooperative societies and post office is allowed as deduction up to rupees 10,000. Interest on savings bank account which is maintained in bank or cooperative banks or cooperative societies or post office, rupees 10,000 can be allowed for deduction under section 80 TTA. Here, post office savings bank account interest is exempt up to 3,500 in individual account and rupees 7,000 in a joint account under section 10 subsection 15 and clause 1. Here the SEC can claim this exemption and balance is taken as income from other sources. Individual SEC can claim exemption up to 3,500 and joint account holders can claim deduction up to 7,000 if there is any balance of interest in their account. That interest amount is considered as income from other sources and later they can claim deduction under this section. First they can claim exemptions and then they can claim deduction under section 80 TTA. Next section is 80 TTB, deduction for interest on deposit. Section 80 TTA is also relating to interest on deposit, but this section 80 TTB is relating to senior citizen savings bank account. Senior citizen being an individual resident in India is entitled to a deduction of rupees 50,000 or actual amount whichever is less. For example, if his income as interest on bank deposit is 45,000, they have to consider 45,000 for deduction, or their income is more than 50,000, they have to consider 50,000 for deduction from income by way of interest on deposits with the bank, cooperative banks, cooperative societies and post office. Here also senior citizen can maintain bank account with the banks or cooperative banks or cooperative societies or post office. So, this is relating to section 80 TTB, deduction for interest on deposits for senior citizens. Next section and last section under general deduction under section 80 is section 80U, that is deduction in case of a person with disability. Under section 80DD, you studied deduction in respect of maintenance and medical treatment of dependent relatives with disability. Here under section 80DD, a person can claim deduction in respect of medical treatment of dependent relative with disability, but under section 80U, the disabled person himself claiming deduction. Okay, here this section is relating to deduction in case of a person with disability. Remember, under section 80DD, the person is claiming deduction on behalf of his relatives treatment, but under this section disabled person himself claiming deduction. In case of an individual with disability, a deduction is allowed to the extent of rupees 75,000, and in case of severe disability, a deduction is allowed to the extent of rupees 1,25,000. Conditions and rules are same both for deduction 80DD and 80U, but the person who is claiming the deduction is different. In this case, disabled person himself is claiming the deduction, and in case of person with disability will get fixed amount of rupees 75,000, and a person with severe disability can claim rupees 1,25,000 as deduction. Here there is no maximum limit. They can claim 75,000 or 1,25,000. Here disability means blindness, low vision, leprosy cured, hearing impairment, locomotor disability, mental retardation, mental illness, suffering from autism, cerebral palsy or multiple disabilities. So, these are the disability comes under this section. Person with disability means a person who suffers from not less than 40% of such disability. Disabled person means person suffering from disability 40% or more, and person with severe disability means the person with 80% or more disabilities. So, these are the conditions and rules under section 80U. These two section 80U and 80DD are same, but the claiming a person are different. Remember that point, other things are same. So, here this is the end of your general deduction under section 80. So far we discussed many sections. They are 80C, 80CCC, 80CCD, 80CCE, 80D, 80DD, DDB, 80G, 80GG, 80GGA, 80GGB, 80GGC, 80P, 80TTA, 80TTB and 80U. So, we learned all these sections. Now onwards we have to study or we have to solve some problems relating to these sections, that is calculation of gross total income and deduction from gross total income to calculate total income. Let us meet in the next session. Thank you.